Investors are entering the second quarter on the defensive after the worst 3 months for global stocks in more than 2 years. Getty Images. The deepening rout in once high-flying technology shares sent U.S. stocks tumbling to start the second quarter, as fresh presidential criticism of Amazon.com and retaliatory tariffs from China rattled markets. Gold rose on haven demand. The index is now lower by more than 10% from its January record. The CBOE Volatility Index jumped to 23, selling was heaviest in technology stocks. The Nasdaq 100 index lost 2.9% as investors continued to offload some of the bull market's biggest gainers. Amazon, up 50% in the past year, sank after Donald Trump renewed his attack on the online retailer. Netflix slid 5%, while chip makers in the S. bonds erased declines and gold spiked higher as the equity selling picked up steam. This is definitely a flight to safety type of market, said Peter Jankowskis, co-chief investment officer at Oakbrook Investments. You're seeing people coming out of the stocks that had been performing well. There'd been various stories that momentum was extended in the marketplace, and I would say today's activity supports that. Trying to unwind a bit. Trump and renewed trade concerns roiled U.S. financial markets to start the second quarter after the worst 3 months for global stocks in more than 2 years. The risk-off tone comes just 2 weeks before earnings season starts, with investors still anticipating a strong showing even as signs have emerged that the synchronized global growth story is faltering just as the Federal Reserve steps up its tightening. The U.S. markets will likely serve as a focal point as investors stateside and elsewhere consider what tact the administration will take toward trade in the weeks ahead and what effects it could have on the U.S. economy and the economies of its trading partners. John Stoltzfus, the chief investment strategist of Oppenheimer. Economy is showing a lot of symptoms of being late cycle, said Mark Chandler, global head of currency strategy at Brown Brothers Harriman. I'm looking for a downturn in maybe late next year or early 2020, with the fiscal stimulus they're getting from the White House giving us a little bit of late cycle expansion, but nothing that changes the game plan. Terminal users can read more in our Markets Live blog. Here are some key events coming up this week. Easter Monday is a public holiday in many major markets including the UK, Australia, Canada, and most of Europe. U.S. manufacturing PMI and ISM manufacturing data due Monday. Reserve Bank of Australia April monetary policy decision due Tuesday. New York Fed debuts the secured overnight financing rate on Tuesday. Reserve Bank of India April policy decision due Thursday. U.S. employment data due Friday. Jobless rate probably fell in March after holding at 4.1% for 5 straight months. These are the main moves in markets. Stocks. This. New York Time. The Nasdaq 100 was off 2.9% and the Dow Jones Industrial Average fell 459 points. It was down as much as 758 points earlier in the session. The MSCI Emerging Market Index dropped 0.1%. Currencies. Bloomberg Dollar Spot Index fell less than 0.05% to 1,124.38. The euro was virtually unchanged at $1.2303, while the yen rose 0.3% to 105.92. The British pound increased 0.2% to $1.4046, the first advance in a week. Bonds. The yield on 10-year treasuries was little changed at 2.74%. The yield on 2-year treasuries fell 2 basis points to 2.25%. Commodities. Gold futures rose 1.3% to $1,345.10 an ounce. West Texas Intermediate crude fell 2.8% to $63.14 a barrel. Bloomberg.